Hello, Warriors. How's everyone doing? I know that we have a very educated audience here. Everyone hear me? Can you guys hear me? Maybe
I,
not.
I can hear you. Good morning.
Oh, good morning. Oh, how are you, Stel?
I'm very
Well,
well, thank you.
I was going to ask the attendees.
We can hear you just fine, coach.
Oh, thank you, Steve. I was going to ask the attendees because I know you guys know. I don't know what was behind this spike in the S&Ps and the spike in the N to 920 last night. Anyone know?
There were some more comments, right, about from the Chinese, I think. So, where was it? I read it somewhere. There was another
Okay.
phone call between Chinese and US. I don't remember which one it was, but
Just comments, huh?
consensus is reached on, resolving some issues and more comments. Nothing concrete, but more comments, basically.
Okay, yeah. They agreed on some stuff. Okay.
Which is surprising. We never had that before, right? Rumors, comments, and all that.
Of course not. Of course not.
Oh,
First time ever.
All right. Well,
Yeah.
this is how I cut through trade war rumors. Okay. I don't care what they say. Good morning, Brock. I look at this, and this to me looks like a flag formation. It's a fractal. This is the 1 hour time frame. Everyone see this? How this is the pattern? Okay, it's a fractal of what's in here, the daily. Same thing, right? Now, when I look at this, I would say we had a trade deal negating the breakdown in USD one, right? But you know what? This doesn't look like it's going to break down. I'm a betting man. I think we're going to break out to the upside out of this potential continuation formation, and here's the fractal of it. Okay,
Regardless, as we had said, that was a huge support level, and the fact that it held there, should keep anybody with a bullish bias until proven otherwise, right?
Yeah, and I'm just saying. Besides that, I think there's a problem if we break out, no matter what they're saying, how they're agreeing, and they have some mutual ground that they could cover. I say this chart doesn't lie. Okay, these are people voting with their wallet, not just their reputation. Okay, wallets mean more to people than their reputation in this world. Okay, so this to me is saying whatever the trade deal is, the wand's going to break out to the upside. And Steve, it almost got to the original target you had a long time ago, but there are much bigger targets if you really want to be a wand bear. And you could just say you could take it all the way down from here, 620 to 90. You could give you 760. I don't think Risk would like that, and I would say that if they have they're talking, that talk is cheap. So watch the wand.
For sure. I agree with you. Although from a fundamental perspective, if you remember, we've had this conversation before.
I don't remember.
I really don't understand what's the concept behind the weakening yuan for the Chinese. I mean, somebody will intuitively think, "Come on, what are you talking about?" I mean, they're exporting stuff by weakening their currency. They actually benefit by being more competitive, right?
Yeah.
But on the other hand, what they're mostly doing is that they're vendor financing with tangible goods and labor, an economy that can never pay them back 100 cents on the dollar. So I don't understand why they don't let the yuan strengthen, so actually local people can enjoy the fruits of their labor themselves.
Yeah. Maybe it's because they have a problem with reserves, just keeping it from weakening. Maybe they don't have the same reserves to do it. But I do recall also their comments was, we will not weaponize the yuan.
Yeah, okay.
Okay,
Usually-
so I mean that's enough.
Usually
You
when
sounds
somebody-
like you're convinced that the Chinese would keep their word about not weaponizing it.
No,
So-
usually when, there is no better proof than having a statement against it, right?
Yeah,
So that means that they're willing to weaponize the yuan. But my
I
comment
think
is,
Shakespeare said, "Thou protest too much."
yeah. So, but my comment is purely fundamental, that I don't understand the end game there. I mean, I don't understand why they vendor finance an economy that either through inflation or some type of limited default in the future will never pay them back all those treasuries. That's
Yeah.
what I mean.
Well, I don't even understand what you mean. So, anyone else understand, Steve? It's 5:05 in the morning here, and I'll tell you something. I never had to go to a lecture at the university at 5:05, and even at 9:00 in the morning, I wouldn't have been able to to absorb it. Ziggy says, "Sounds Greek to me."
You know something? I was
What?
exactly the same type of guy. Fortunately, my university, which was a U.S. university based here in Greece,
Yeah.
had also afternoon lectures.
Oh,
So
yeah.
needless to say, all my lectures while I was a student were noon and thereafter, because nightlife and all that.
Yeah.
No chance I would make it to a morning lesson back then.
If I could draw a cartoon, it would be me sitting in the auditorium, hungover from something, all right, with the professor's ideas flying out of his mouth and like those bubbles they use in a cartoon, and hitting me in the forehead and bouncing back. All right. Anyway, so I think the yuan's a big deal. The yen keeps chugging along, but I keep trying it. So I'm trying it again here. We'll see what happens. And the reason I'm trying it is because I think that, we're going to get another run in TLT. I'd buy a pullback here in TLT if it happened. And doesn't this look like the yuan a little bit? And doesn't this look like eventually, no matter what jiggles happen here, unless we just start breaking down under 34, that we could see a new high in bonds? And we could see a new low in bonds, and maybe a retest in the 10-year. So that's the reason I think the yen, which I guess decided to pay attention more to equities all of a sudden, but that there might be some type of short setting up here, mainly because of the bonds. I feel if the bonds are going to 148, the end's not going to be at 109. That's my bet. So joining Blake on that, but now he's probably bullish by the time he gets on. So I think that he has that bias. I don't think his 109.20 trade took it away. So
it did actually.
It did. See,
It
now I
did.
turned bearish, and now you're going to tell me
No.
120.
Actually, what happened is, it's funny. I was talking about it this morning. And good morning, by the way,
Good morning,
guys.
buddy.
I sit in front of my computer, 12, 13, 15 hours a day. Nothing happens. I have to take my son to a concert so he has to do a concert review for one of his, classes. I drive 10 minutes. I'm in the parking lot. I'm dropping him off. I look down at my quotes. I see the dollar yen spiking. I'm like, holy crap. Then I see I get stopped out. I'm like, oh my God. I look at, since I'm on my phone, I look at Twitter. I see the news that got released. I'm like, man, this market just spiked up on talk. I turned around. I did short the dollar yen above 109 again. And now I'm only up a few pips, but it's like that move actually stopped me out, and I had to re-enter.
What time was it, Blake? Your time?
Let's see. His concert started at 6 o'clock.
Okay.
No, 7 o'clock. So 7 o'clock my time. Was it 7? 7 to 8:30. I'm trying to think what time. I have to go revisit the time. But yeah, it was like Yeah, 7 o'clock. 7 o'clock. So it was 6 o'clock your time
Yeah.
when it happened.
Yeah.
And yeah, it was some talk about that there's progress being made, and they had a phone conversation yesterday. Blah 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 blah. But yeah, it was very frustrating. It's like, like I said, you sit around all day long, and the moment you step away,
Yeah.
it's like, but it is what it is. Now, as far as the markets go, I don't know if you've seen the euro. I mean, we are in less than a 15 pip trading range right now.
Yeah.
I mean, it's a tight trading range. The people joking in our chat room, if it's Thanksgiving already, it's like, I mean, it is.
It's
It is
Monday. It started.
It's ridiculously slow. And then, now that North Americans are back, and they're sitting in their seats now. We're starting to see equity markets come back to life. Equity markets are moving up again. One of the things that that I think we have to be wary of is the spike up overnight, to highs. Now, like I said, we're getting a lift right now, which is fine. My fear would be is if equity markets take a turn for the worse today. I don't see that happening. One of the things I guess I had a comment from somebody, not in our chat room. This was it was my brother-in-law. We were talking about it this weekend, and he's like, "How's the markets?" I'm like, "It's unbearable because they just grind higher." And I'm like, we need, as traders, we need volatility. We need the markets to move up and down. I don't care if they're trending higher. I don't care if they're trending lower. But as long as we get some volatility while that's happening, it's fine. This grinding is very tough. And he's like, "So why do the markets grind up like that?" And I'm like, "Well, when they grind up just like what we've seen here the last month and a half or 2 months, the reason why is there's constant influx of think about like 401ks, IRAs, and the constant drip into the market that needs to be allocated. So when there's nothing to do, as far as there's nothing to to trade because we're waiting on news, and the FX markets volatility is dead. Stocks continue to grind higher because there's that constant influx of capital that's being deployed. Between that and
There is
buybacks,
no alternative.
yeah. Between that, buybacks, funds have to. Everybody's chasing yield. There's constant deployment into the market, so that's why there's that old adage: don't short a quiet market, because they'll just continuously grind higher, and that's the case right now, and that's what we're dealing with. But the grind higher with low volatility, and dips that are 0.3%, before you bounce again. It's hard for us as traders who yearn for volatility to make money. Now, one of the things that I want to talk a little bit about volatility. For those of you guys that don't get it, the Daily Sentiment Index, which is a subscription that we subscribe to. It's not something that I don't hang my hat on it by any stretch of the means, but it's something that I do pay attention to when we get to extremes. Volatility came in at 10 overnight. So if you look at the VIX complex, let's take a look at the VIX really quick. Here we go. Here's the VIX. We're breaking down this little minor trend line. We're back to levels from like April and July, midsummer volatility. This low period of volatility, we're trading at a 10 in VIX, which is it's an extreme bearish reading. That means the risk of a spike higher in volatility is increasing, here in the next couple of days. So you have to be a little careful with complacency. One of the things that I was just looking at and want to point out again is stocks hit a new high. If for some reason we close on our lows today, which I don't know if that's going to happen. We'd have to have something, some material reason for stocks to close at their lows. You know, there would have to be some sort of breakdown in talks, or some sort of Chinese rebuttal as far as not happy with the tariff rollback, that proposal is being made, something like that. Unless that happens, the stock market, I doubt we're going to see any like profit taking per se, which could create a little bit of volatility. But it's something that is worth noting. We should be paying a little bit of attention just to the complacency of the market at this stage in the game.
Looks like drive 2, Blake.
What?
Second drive up here.
Oh, up here?
Yeah, one. That's yeah.
This would be one?
No, I mean just up there at recent action. That's 1, and that's 2. So you get a little pullback.
1, 2, and then third.
And
drive.
you could go back and find a 3, but I found sometimes on the last wave, on the third, that you could have 3 within the third wave. You know what I'm saying? Like a fractal of it.
Oh, so this being the
larger one. Yeah.
2. Is this a?
No, it's got to be a higher high.
So this counts as wave 2.
Or you could go back beyond that and where your trend line's anchored.
1.
Yeah, there you go.
2, 3, and then we've got a fractal inside that. Yeah, I mean,
something to watch.
Yeah, like I said, I'm not excited about downside in the market. I have yen exposure, and I want to keep it. I want to keep my yen exposure, and it's the same reasoning as last week. Is the yen, despite it being a little weaker the first couple of days of this week, despite this move that we've seen here, I want to keep yen exposure because it is not moving, and it's not correlating as strongly with equity. So if there is risk of an equity market pullback, the yen yields will drop. The yen is also, by the way, the lower end of yields are dropping right now. Here, I'll show you really quick.
So from today's candle, Blake, what a tight risk trade. You could short it with stops over 20.
You could, yeah.
It's a shot.
I'm watching yields right here. Here's the 5-year. This is the 10 years, the 30 years. So, the front end of the curve is dropping a little bit there. So it's something to. Oops, I meant to grab that.
The back longer and weaker, which is what happens before they invert again. So
yeah. So, it's I like I said, for me, I want to keep yen exposure more as a hedge at this point. Because if stocks do come down, I think the yen's going to strengthen. I still think the yen would strengthen dramatically. The yen is, remember, it is a funding currency. It's a carry trade funding currency because rates are at 0. Don't forget that the euro is as well. So I always say if, because it's like, when's the last time we saw any type of meaningful sell-off in risk? If there is some risk aversion, I do believe that the euro is going to hold up better than most. And that's because it is also a funding currency. So you would see maybe the Aussie dollar come under pressure. The euro would outperform. One of the currencies that I think really I have my eye on, and you'll notice that I have this right here is an alarm set on the euro Aussie. And I'm just watching it. If we get back above 163, I'm interested. I'm interested in a move back up towards the upper end of its channel. But it's the only way this is going to happen. This move right here is a little bit of risk aversion. We'd have to see the Aussie break down and then euro kind of hold steady, maybe even go up. Speaking of the Aussie, let's talk a little bit about the Aussie overnight. The Aussie is brushing right against this confluence. You can see it right here. You'll notice this right here. Okay. 127% extension of this move up. It's a 618 retracement of this entire move here. Okay. That's a confluence. It's held 1, 2, 3 times. Third being, overnight. Okay. So, my question to anybody is, how important is 67.70 for the Aussie? Now that's only 10 pips away. you know, and the Aussie is not necessarily the trade I want to take. I'm not so much interested in shorting the Aussie dollar. If it breaks down, what I'm more interested in doing is buying Euro Aussie, or maybe the Aussie yen, which is sitting right on a, you know, right on a trend line here. See, the 50-day moving average is, you know, just kind of supporting it near term. So is this trend line. So if the Aussie starts breaking down, the Aussie yen or the Euro Aussie is probably going to be my trade of choice, rather than putting dollar exposure out there against the Aussie. I'd rather, you know, look at it in different terms, you know, Euro Aussie or, you know, Aussie yen. But I think we got to follow the Aussie, because it's the same conversation we had yesterday. I don't need to beat this conversation up too much or reiterate it too much, but I will say, if things were so great in with the China US trade negotiations, why isn't the Aussie performing better right now? It is performing actually quite poorly. And yes, if there is a secured US China trade deal, I think that the Aussie would do very well. I think the Aussie would bounce, and maybe this is the best price you could possibly get long right now for the Aussie. If there's a trade deal that's, you know, immediately right around the corner. But, you know, the flip side to that is, if we are so close, why is the Aussie just performing so horribly at this moment? So hold on real quick. Yields are breaking down right now. They're actually at their lows. Take a look at here's the 10-year yield. I'll just pull it up really fast. I just had it here. You can see the 10 years pushing below its overnight lows. Now, the dollar yen is still pretty far off of its lows for the day. If you compare this, let's do the dollar yen here. I don't like that. Let me remove that. I think I have to do compare, add symbol.
No, you're doing it correctly.
Ah, there we go. Okay. What, Steve?
Yeah, I said you were doing it correctly.
Yeah, and what I wanted to point out is, with yields coming down, you can see they're breaking lows right now. The dollar yen's well off of its lows, which come in at like 80 something. I want to say 85. So the dollar yen might actually start joining the party here to the downside. So just keep that in mind. Like I said, I've got some short dollar yen exposure again. I can't believe I got stopped out, but it is what it is. You know, looks like, hold on. China trade talks halted at some point. This is Conway who's saying this. Hold on. I'm bringing up the article right now. Some sticking points remain in phase one. China talks, hold on. Conway, phase one trade talks still dealing with tech transfers. So there's still some sticking points, and that's obviously got yields coming down. Stocks are coming down a little bit. It's not big. It's not big, but you know, it's notable, and it's something that, you know, we should obviously you know, be watching right now. Dollar yen is starting to play catch up a little bit here with yields. So as yields have come down, dollar yen's starting to come down. See if we break back below 108.85, that might bring in a little bit more. Oops, let me remove that. Here's the dollar yen, just so you guys can see. You know, we break below this 108.85, then you have to start looking at, you know, possibly a head and shoulder pattern intraday. You know, looks like this. Let me grab my drawing tool. Give me 1 second. Annotate. You know, you have a shoulder, head, shoulder. break below this 85 level might take us back down to this, 60s or 70s. Nothing super exciting, but it's, on a day where the euro is only moving 15, 20 pips, that maybe that is kind of exciting if we can get a 20 pip move lower in the dollar yen. But looks like, the market's taking this news, rather seriously, because the yields are dropping. All right. So, and actually the euro's at the highs of the session. I can't get too excited about the euro unless we get back above 110.30. We move back above here. Then the dollar yen might, the euro dollar might look a little bit more attractive. But where's it going to go? I mean, that's the other question you have to ask yourself is where exactly is the euro going to go? If we break 110.30, yeah, we might see like 110.60 again. So just have realistic expectations of what an upside move in the euro dollar may look like. I don't think it's super dramatic at this point. So anyway, hold on really quick. I'm trying to look to see if there's any more news coming out. Anyway, is that you, Dale, that's making the wind noise?
Probably, yeah.
Okay.
My aunt used to whistle.
I can hear you whistling. Is
I can't believe I'm Auntie Faye. That's for anyway. It would drive us crazy when she drove. She was always nervous, and she wore dentures and she whistled all the time. So it hit me about 50 years after.
I was like, oh my God, you're whistling.
Okay.
Yeah, no.
Whistle while you trade.
Well, yeah. Oh,
all right.
Let's save me from. I should ask Stelios what his take on Brexit is.
Oh, he can't wait to
before
talk about
that.
it.
Before that, we have to wish Stelios for his name day.
Oh, that's both of you guys. Steve,
that's both of us, actually. Yes.
You just wanted me and Dale to wish you happy name day.
I've never heard of such a holiday.
About you Greeks is you get to celebrate birthdays, name days. You got all sorts of days. It's like holidays all the time.
Happy name day to the Stelioses. Happy name day to the Stelioses. Sounds like halitosis. Happy name day to the Stelioses. Happy birthday, name day, whatever it is to you.
The Stelioses.
Doesn't sound like halitosis. Huh?
Sounds like a disease, yeah.
Only when Steve starts talking politics.
So I'm going to let you guys take over, and I want Stelios to spend the next 30 minutes talking about Brexit. But the one thing that I want to point out is the pound is a little weaker today. I think the polls are getting a little tight, and you're seeing some pound weakness. But more importantly, the euro pound has been drifting down towards these lows. I know Steve's been rather bearish, but what we're not doing right now, and this is on the hourly chart, is we're not making newer lows. So I've been watching either the 85 pence level, which is right here, which would be basically a double bottom, or that's just key support. But more importantly, right now, if you're bearish, you got to watch this 86 pence. If we break above that, you might get a little bit of a squeeze. You might see some cable or pound liquidation. Just something that I've been watching and I haven't done anything with. I'm not trading the cable right now or anything pound related, but it is something that I'm at least I've got it on my radar. So, but I'm going to pass it over to you guys. Remember, if you are looking for a brokerage firm, you're not happy with the broker you're using, make sure you visit ForcePark FX. They are our webinar sponsor. We've been working with them for the last 3 years, and they're just a great source of information, resource for you guys. Even if you don't end up changing your brokerage firm, at least reaching out to them and asking the questions that maybe your broker won't answer for you. They're like your representation. So make sure you reach out to them, and you can get a hold of them through the Skype or email right here on our website. So just tell them we sent you. And with that being said, I'm going to pass it over to you guys.
Thank you, Blake.
Thank you, Blake.
Thanks, guys. Have a good one. Happy Tuesday.
You
Same
too.
to you.
All right.
So I'm not going to talk about Brexit for half an hour, but there is
come on.
I guess
Everybody wants you to talk half an hour about Brexit, please.
I guess what people are looking at is tomorrow's poll, which is the important one, which is apparently, Amanda was talking about this in the chat room, the one that predicted the hung parliament in 2017. So really the one that is most accurate. So
or was at least last time.
Or was, yes. Past performance, past results do not guarantee future performance.
Exactly.
But I mean, so I guess markets are waiting for that and see what happens there. But we've had no other major news out of that front. We did have Chairman Powell speaking late yesterday, and he did sound quite neutral. So he said that rates are probably going to remain on hold
until Trump calls him again.
The key word being probably, because remember the last meeting he did say that the last cut said, look, this was an adjustment and this is it. So probably remaining on hold is, is opening the door for other things. But he did say that they're going to follow the economic data, and only if something changes substantially will the path of rates change. So he did actually also say that the glass is much more than half full. Make whatever you want out of that.
I hope he remembers that everything is being recorded. Yeah.
Just like Trump's tweets, right? Everything that happens now, there's a tweet for it from 5 years ago.
Because in a year's time from now, everybody's going to be asking him, how come a year ago, the glass was more than half full, and now things are totally different. But they say what they have to say. I mean, they've never predicted a recession. They will never do in the future as well. So no matter what he says, it doesn't really matter. The only important thing he has said, the previous time we had the FOMC and the cut rates, which in my opinion, that was 100% honest, was that they are not willing to move higher unless they see a substantial and sustained increase in inflation. And remember that theoretically speaking, their preferred measure has been oscillating between 2.3 and 2.4 for quite some time now, which is above what was the target, right? That's why they had to shift the goalposts and talk about symmetrical inflation, etc. So one thing is for sure, I don't know for how long they're going to stay at those rates, but 99% the next move is going to be lower. Sooner, a little bit later, who knows, but it's going to be lower. Definitely not higher.
Yep. Yeah. So I agree with that. So let's see what happens with the Fed going forward. And what else is there to say? We had some data-wise, didn't have that much. We had retail sales out of New Zealand, which actually beat quite substantially, but still, the Kiwi and the Aussie are not really gaining any ground. And I think commodity currencies overall are struggling a little bit. That was it. I think. Let's see. We have some today. Oh, we had some numbers out of Sweden actually, which were good, and they're pushing Scandis a little higher.
And the Swedish kroner, I'm going to show it again.
Yeah.
Thanks for the wishes, by the way, Richard and Costa. And USD SEK, once again, I mean, I've shown this chart multiple times. Oh, sorry, this is a 4-hour chart. We want to go on the daily. So USD SEK is once again threatening with a really substantial breakdown here. There it is. So, this wedge dates back to summer of 2018. So it's been like now like more than a year. And, we've made several attempts the last 3 days, fourth being today, to break below it. We haven't managed to do so. We haven't managed to close below it. Let's see if today is the day that, it can actually make this move. So I think that's going to be quite a substantial technical development if we do manage to close below it. USD NOK, on the other hand, Stelio, which is one of your favorites, might still be building a head and shoulders formation here. But in all honesty, it has to turn lower, ASAP, because then we'll really start losing symmetry here, and it's going to be a much, much, much more likely scenario that this is a bullish consolidation before continuing towards the next objective, which is the 161.8% at 934 and change. So, these are the levels to watch here in USD NOK. I doubt it that one can start moving aggressively to the downside and the other one being moving aggressively to the upside. So, let's see. I mean, theoretically speaking, they should both make the same type of move. So either the USD SEK rebounds from where it currently stands, which is, strong support, and then we see USD NOK continuing higher, or we see USD SEK breaking down, in which case we might actually get that developing head and shoulders formation, trigger. So that's what I think about the Scandis. Over the last few years, we've not had enough talk about Brexit. That is very true. I mean, I would almost give a kidney to make everything that has to do with Brexit and the US-China deal disappear. Like, completely.
These webinars are recorded, so you said it now. Okay.
Yeah. Yeah, I mean, I just want them to go away forever, like ever. I don't want to hear again about Brexit, about US-China deal. And I'm afraid that the US-China deal is going to become even more of a drama, because they're going to start dissecting the deal even further if needed to produce something. So, we had initially Trump playing hard, like, I'm going to get a deal done and it's going to be fully inclusive of everything. And I'm not going to stop until we get the best deal and we show them, blah, blah, blah. Then he says that no chance this is going to happen, because the Chinese, of course, have the luxury of, being able to be patient, because they're not going to be voted for in a year. So then he was like, okay, let's break it to phase 1, phase 2, phase 3. Now I wouldn't be surprised if we end up having something, we're going to break phase 1 to A and B. We're going to first do, A, and then we're going to do a little bit of B, and, who knows?
Oh my God, yeah.
Yeah, perhaps someday we're going to start discussing about phase 2 if you re-elect me. And, this thing can go on for one more year at the very least, until we get the election period. What blood type is your kidney? Zero positive.
Hey, me too. Dominic says I would give a kidney, just not mine. Nice one.
Yeah, Ziggy is zero positive, so let me know. Let me know if I can help somehow. Having to do with the mainstream currencies. First of all, I want to make a couple of comments on things that Blake did mention. And Dale actually mentioned, and one of them has to do with the yields, because this formation to me, so I agree that the downside looks likely, because just zoom out and look at this move lower, right? I mean, what are the chances that this is a corrective move, and what are the chances that this is a new bull move higher? I think the chances are greatly in favor of this being a correction higher before we see lower yields. So I like the fact that we got rejected, near this channel's resistance. And I do think that it is a very decent possibility that we're going to continue lower, especially if we break this trend line support. I'm pretty sure we're going to be seeing lower lows. So we're going to see prices below 139 in the 10-year yield. And if you have a look at the boons, I don't have up the the yields of the bonds, but it's the inverse. The bonds might as well have also finished a corrective move lower. And the same thing with the treasuries, right? I mean, this consolidation looks likely corrective. So, it's the opposite exactly from the yields that we saw. But look at the bonds. One scenario might be that the bonds are already done. They
Yeah, what
found
if the bonds make new high, the note makes new highs,
Mhm.
and you just maybe get a rally back to 75, 76 in the bonds? That would be a pretty interesting market tell.
Yeah, it would be
Lower
a nice
high.
divergence. Yeah,
Yeah,
it would be. I mean, we
because
had
it's
this.
leading it.
Yeah, we had this head and shoulders formation here. Its target was a lot lower, but I cannot turn a blind eye to the fact that this looks quite a nice wedge, and we're currently
Yeah.
testing resistance. So if we do break through this horizontal resistance area, I think that the chances are increasing that we might have bottomed here in the bond market, and of course, we might see divergence between the bonds and the treasuries in the extent of a move, but there is no chance that one of them is going to be climbing higher and the other one is going to be dumping lower, right? I mean,
it's just a matter of degrees.
Yeah,
and
it's a matter
relative strength.
Exactly, it's a matter of degree. I mean, one might be climbing higher, like slowly, and the other one, doing it faster. But
like you drive, like Stelios. no, like me driving next to you. It'd be a blur.
Stelios, I hope he's not here anymore. Okay. Stelios is growing old. The first thing he tells me every time he goes in my car is like,
your seatbelt on?
No, of course we always put our seatbelts on. There's no question about it. I mean, you have to be
All
nuts. But it's like, dude, please don't go fast with me in the car, okay?
I know that's a green light for you.
although he used to own really supercars, so he's just growing older.
He's happy. He wants to live. He loves his wife and his kids. Can you blame the guy? I mean. Anyway.
So another
nice look.
Another one I wanted to show is once again the Kiwi for two reasons. First of all, because stubbornly the Kiwi against the dollar cannot get unstuck from this resistance area, and this is quite a big signal. I mean, we have been stalling here again and again and again and again, but we haven't managed to pull back really. So I wouldn't be surprised if we actually break higher. And I remind you that if that's the case, we trigger an inverted head and shoulders formation, while at the same time the Kiwi yen is also testing resistance from this rectangle. And we also see an attempt here from the RSI to break higher at the same time. So, I mean, the Kiwi looks quite appealing if it does this move. And I do think that, if that's the case, it should extend. The Aussie Kiwi, on the other hand, after getting rejected from this channel, has not really stopped moving. Although the reason I mention it today is we haven't reached the bottom of the channel, but we are now testing the confluence of the 200 daily moving average and the 50% fib. So we might temporarily stop here. Now, taking everything into consideration, don't forget that we remain within this channel. So, taking a direction for more than like a short-term trade probably doesn't make much sense here. Now, since the market has been eerily quiet, we have the ability to have a look at a few more exotic currencies that I also think are sending us some type of a signal. And specifically, here is the USD MXN, which once again rebounded from this long-term triangle, and it's again in the middle of this range. Keep in mind that theoretically speaking, risk on should be helping this pair break to the downside, right? So this is another divergence between what we're seeing between stocks and what we see in FX. In fact, given the prior trend higher, I definitely favor an eventual break higher in the USDMXN, and probably if that happens, it's also going to coincide with risk off. Somebody can say more or less the same thing about the USD against the South African rand. You can see here that we also have some type of a consolidation, right? And the USD Turkish lira, that though is has more esoteric reasons as well. I mean, we do see here a triangle, and we do see this coiling. But in this case, I wouldn't be surprised, even if the rest do not break down, I wouldn't be surprised if USD Turkish lira first made a move like this before higher. Although it can as well just break higher directly, right? But perhaps there is one more move missing to the downside before doing so. So, we hadn't had a look at those exotics for quite some time. So, given that the market is, as I said, very quiet, it was probably a good opportunity to do so. Now, looks to me as though Euro USD has put in an interim bottom and a move to 114 looks likely. What would you need to see to confirm my view? Okay, what would I need? It's going to help me a lot if I see USD SEK breakdown from the ascending wedge that I was showing you, because the USD SEK is very nicely inversely correlated to Euro USD, and perhaps it's going to lead it. So closing below that trend line that we saw earlier in USD SEK is going to be a positive sign, in my opinion, for the future of Euro USD. And I would also want to see, again, a daily close above 110.70, 110.75, this trend line of resistance. That would increase my confidence that we're going to get a squeeze higher, which, as I've said, my gut feeling is telling me that sooner rather than later, the euro is also going to squeeze people more or less in the same manner that the cable did earlier. Now, I also wanted to show Palladium because it's attempting to test the highs once again. Keep in mind that, after such a move higher, there is a decent chance that we're going to see, initially expected that we might see one more leg lower, but now that we've almost reached the highs, there is also an alternative scenario that we might form some kind of a triangle here. So I don't think it's a bad risk-reward ratio to bet on Palladium not yet breaking to new highs. I think it might work. But I also wanted to show which was it? Growing older, and anyhow, I remember it was something that was also testing some important trend line. I thought it was one of the metals, but obviously I'm mistaken. Having to do with crude, more or less in the same manner that we were looking at the Kiwi before. It's stubbornly, testing this resistance area just below 61.8, still remains within this ascending channel, still remains within a larger triangle. You can see it here in red. I would still favor the next bigger move to be to the downside, but that doesn't mean that we can see first an initial move higher to retest the channel before that happens. Okay, so that's my point of view with that. Can you please advise on S&P and the DAX? Yes, the DAX, I consider the DAX to be a better opportunity the previous days, simply because the DAX was clearly forming, and it still is, what looks like a bull flag. Okay, so having to do with the DAX, I know it's overdone, right? I know it even overthrew this ascending channel, but this type of price action that we've seen, I mean, in consolidating so many days without actually giving back almost any of the gains, is usually a very bullish type of a corrective move. Okay, so I do think that the DAX has a much higher chance of producing at least one more thrust to the upside than anything else. That's what I think about the DAX. Now, S&P has overthrown the equivalent channel. It has overthrown the confluence of resistances that we had here. So unless it like turns lower ASAP, like today, tomorrow, it's going higher as well. So unless it proves that this was like a short-term false break higher, and it has to do this within this week, I think it's going to aim for the next upside objective, which is at almost at 3,200. Okay, I mean, you can fight the trend. It's obvious that it still remains higher, irrespective of fundamentals and everything else. That's the case. Nasdaq, same deal as well. I mean, breaking out of this wedge. And one more thing that I wanted to show here is the IWM. Because the IWM, and this, in my opinion, is a very important development. If you remember, those of you that participate frequently here, I've mentioned about the importance of this resistance area. The IWM initially stalled at what was a rectangular resistance that dated back like 13 months, right? With the exception of this move lower. And if you want to count after that, dates back to the beginning of the year. Okay. But I said a few days later that, listen, I mean, we bumped again our heads on resistance at 160, but I'm not seeing, the type of rejection that you would want to see if you actually expected it to break down. So I had marked this as a potential bull flag, exactly as we did in the DAX. And perhaps in this case, although it had been underperforming for a long period of time, you can see also here the RSI confirming this breakout, we might actually be seeing after a long time, I mean, for the first time this year, an actual break higher from this range. And if we want to take the simple technical formation, extending the range's height, that targets new highs in the Russell as well, right? It targets somewhere like in the area of 175. So I want to see how we're going to close the day. But if we close, in this type of manner that I see here, I do think that this is an important development that you can't dismiss. So
okay, can I push back on it a little bit? I've been looking for 162 for a long time to clean out all the bears, which is accomplished. So it's possible that, we could measure up there. So let me ask you this. We have a breakout. I don't know what level you want to define it at. Maybe that blue flag.
First of all,
let me finish.
Yeah, first of all, we need to confirm.
Okay.
Because you never know. I mean, we might have like
we will today.
A terrible day today, and
maybe yeah, you're right. Could be.
Yeah.
All right. So the breakout would be negated back under the flag line.
Oh yeah, absolutely.
Today,
and probably that's also going to be a very bearish signal for the exact reason you mentioned.
Yeah, that's what I'm thinking.
Yeah, because a lot of people
may not fail today, but it could end up trading up for a few days and then trade back underneath it. Would be a more conservative way to approach it than trying to get the edge and putting one on here and putting one on at 63.
One more comment I wanted to make about the indices is that although the sentiment on the VIX is quite bearish, I mean, it's 10, which is in the DSI that Blake showed before, which is reaching extreme levels, although the really extreme levels we've seen in the past are like in the vicinity of 5. On the other hand, this slow grind higher in the indices has not produced the euphoric readings in the DSI that we had seen back in 2018 at the beginning. So back then we were seeing like some DSI readings of like 94, 95, 96. I mean, some super extreme
I may have
readings.
Seen a 90 last week. That's the highest I saw.
Yeah, and now the DSI is somewhere at 85, 86, 87. So yeah, definitely.
So how do you interpret it? Not bullish enough to fade?
Definitely bullish, but not bullish enough to exclude the possibility of, some type of a parabolic acceleration higher
Okay.
before failing. You know what I mean?
A melt up, yeah.
Yeah, even a short-term melt up, right? Like,
Yeah.
you know, a
3
complete
days.
3 days, like complete capitulation from the bears,
Yeah.
getting the index higher within 3 days, let's say another 3-4% higher, 5% higher or whatever. Then everybody gives up. Sentiment climbs to like 92, 93, 94, 95. And then we see like, you know, some type of a, you know, correction lower.
How's the bellwether look, Microsoft?
Let's have a look at it. Good question.
Made new high yesterday, or almost made a new.
I doubt it that it's going to be doing bad. There you go. And by the way, as you see, the first test of this ascending wedge did temporarily fail. I mean, this stock really. Just look at the long-term chart of the stock. This is, I mean, this is just vertical now, right? Yeah. Looking at the big picture. I mean, back in summer of 2010, like even October 2010, I mean, like 9 years ago, it was trading in 23, and it's currently.
Look at the RSI. Hasn't made a new high since the end of 17.
Yeah, the RSI is diverging seriously.
Yeah,
seriously. I mean, even like this, it is diverging seriously. And you know, we've talked in the past about wedges, and when you can be confident that a wedge is a terminal formation and when not, and it has to do with how much inclined it is. And in my opinion, this wedge is inclined enough to be terminal. Does this mean that we cannot get an overthrow from this wedge? No, it doesn't.
It does not, no.
Yeah, we can get an overthrow.
But you better start paying attention to it right now.
Yeah, but it might.
Don't fall asleep now.
Yeah, exactly. Worth noting is the absence of any mention from Powell regarding stocks. He could have said something, but did not. Of course he didn't. And he's not going to say that. I mean, it's more than obvious at the very, very, very beginning of his tenure. I thought that Powell looked like being like a serious guy. Serious. I mean, as serious as somebody that works in the Fed can be, which is not very serious. Because in order for you to work in the Fed or any of the main central banks and actually play along with this type of monetary policy that we have, there are only two likely possibilities. Possibility number one, you have no idea about economics, you're completely clueless. Possibility number two, you know very well what is happening, and you know you like the position, you like being in power, you like the money you get, you like the money you're going to get after you finish up, because they're going to start paying you like $250,000 to give a stupid speech stating the obvious, right? Like ex-presidents do. And you just turn a blind eye on, you know, what really an economy needs. And you're going to be like, who cares? I'm not going to solve the problems of the world. If I don't take the position, there's going to be somebody else willing in my place to take the position that is going to be willing to do whatever is necessary to keep the Ponzi scheme going. So initially, Powell looked a little bit more serious than that. So I expected that, of course, he wouldn't be like, you know, making a 180 degrees turn and, you know, switching monetary policy to proper, but at least that he would resist the acceleration of recklessness, let's call it. But, you know, as it seems, unfortunately, he also ended up being a puppet. So, you know, it is what it is. Also, his words were very strong to try to engineer a move higher in inflation expectations. It was a very dovish speech. I agree with you. Nominal bond yields are likely to head higher and dollar lower. I totally agree with you. I mean, it shows you how manipulated this market is. And now by manipulated, I mean directly from central banks buying, you know, bonds and everything else, but also indirectly because you have money following what the central banks are doing, just following the momentum. So, you know, this way, in essence, central banks manipulate, you know, I mean, they distort the real value of assets in two ways, the direct one and the indirect one, because big investors know that they should not be fighting the Fed, right? So the thing is the following. You have, until a few years ago, there was a common understanding between all central bankers on the planet. You do not let the inflation genie out of the bottle, because if you ever let the inflation genie out of the bottle, it's a very, very tough situation getting it back in, especially when you have economies with so high debt as the one we have now. Okay. But now we see Powell having for many consecutive months, the PCE being above target. And not only he's saying that it's okay, don't worry about it, it's symmetrical, but he's still stating that from here, he would want to see a substantial and sustained move higher to even consider doing something about it. So in essence, he's photographing something like north of 3%. Coach, do we have an interview?
Yeah, we do, buddy.
Okay, so enjoy the interview and we'll be back tomorrow.
Okay, and darn those central planners. Right, Matt? Okay, Matt.
Yeah.
Thank you so much. Huh? Thank you for showing up. All right. Oh, no, I didn't want to do that. Hold on. Okay. You're a panelist now, bro. And I just unmuted you. Or I didn't have to.
Still seems muted.
Won't let me unmute him, I think, because I let him talk before I promoted him. I'll try and make you.
Perhaps he has to unmute him. Maybe he has to unmute himself from the panel.
Check. Yeah. Hello.
There he is.
Okay, you're good, man.
Is.
How are you, buddy?
Hello.
Hi, Matt. Can you hear me? We can hear you.
You can hear me?
Yeah,
yes,
I can hear
loud
you.
And clear.
Perfect. Okay, so can you see my screen?
Not yet. You have to go to the green share box.
You have.
Oh,
yeah.
Right down there. Okay, blah blah blah. Where is it? Here.
Blah de blah.
Blah blah blah. Where did it go? Okay, share box. There we go. And screen share. How about now?
Beautiful.
Okay.
We're good with pink and blue, or
Cool.
maybe it's fuchsia.
All right.
All
right. Put together a few things for you this morning. And
hey,
I guess
I want to thank you on this holiday week for showing up and sharing some things with us, Matt, off the bat. Okay.
Oh, yeah, for sure. Thank you for having me back again.
I look forward to your interviews. I learn from you every time. So I'm interested with what you're saying here on the screen box. Looks like you're considering potential correction close to these levels.
So what we're looking at here is more just a long-term broad view.
I'd say so.
Yeah, exactly. Right.
Yeah.
And, the general view here is, multi-years of consolidation followed by a strong secular bull market. And, if we look at the increases that we've seen in the past, that where we're at right now, seems like it has more room to go, historically speaking.
Sorry to interrupt. Is there a chance you can lower a little bit your microphone or pull it a little bit further away?
Sure. How about?
Can you lower your audio, Steve?
No,
yeah.
I said it also because it distorts his voice a little bit.
Oh, okay.
Too loud.
Oh, is it too loud? Okay, so meeting controls.
I hear him clear. Tell you, having a producer on my show, I don't know. I have to reassess this.
Maybe I'll just step back. Where's the?
You're good. Just go ahead.
Okay. Oh wait, here, there it is. I can do this. Okay, I'll do that. Okay, so what we're gonna take a look at today is just kind of like the general market to get a risk on.
A little bit louder now.
Now it's louder. Now you need louder. Come on, you guys.
A little bit louder, and you'll be perfect.
Okay, so let's go halfway.
Steve's
Perfect.
a technical analist.
Perfect.
Analyst.
Now you're perfect.
All right.
Analyst.
All right. Thanks.
Okay.
Thanks, Steve.
So I don't know if you guys just see this part of the chart or screen or all the way across the top. So we're going to take a look at the general macro, a couple things
Okay.
to look at: gold, cannabis stocks, a currency pair, and then crypto to end off the 30 minutes here. So the general view that I'm looking at is what is going on in the market. So the reason you had me on kind of originally was crypto stuff, and even though I do crypto stuff, you know, Wyckoff and Livermore kind of charts are my thing as well too. But the general view for crypto is, you know, a lot of people say it's an uncorrelated asset, but I kind of tend to disagree. I think that there's a lot of correlation between the general macro being risk on and that being good for Bitcoin. I don't know. I think the same kind of goes, if you look at charts, kind of has said the same for gold in the past too. So even though gold might have been a hedge in bad times, when the bad times first start, you see almost everything sell off, because if people are losing, you know, if money managers are losing money, you know, they've got to take money from where they have made profit to cover their losses, kind of thing. And then gold, or, you know, whatever risk of hedging bounces, you know, before the market does. So I think the same kind of thing is kind of where Bitcoin lies in the whole thing. So which is why I start with this, because it looks like the general macro view is that we continue to be in a bull market. An interesting chart that I came up with last year was this look on General Electric. And the basic thing that you're seeing right here is that recessions are in the yellow boxes, and we're seeing general declines from highs in these pink boxes, and then sideways on the monthly chart in the blue boxes. So what you see here is the downtrend here, the downtrend here, the downtrend here, and here have both been met with recessions. Whereas this downtrend here, the 1987 correction, didn't see a recession until afterwards, and then a resumption of the bull market. And you can see here the sell-off, the sideways portion right in here, and these sideways portions here, 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 and here have all been met with an RSI dipping into oversold, and then as it leaves and gets back to oversold, a resumption of trend. So what we've seen here is this huge sell-off in GE. Part of that you could say is fundamentals of the company, but the same thing has happened where we've had a bit of base here sideways, and we have broken above that 1050 level with oversold. So that harkens back to this 1987 theory that I've been kind of chirping away on since 2017, which is that, you know, the market is good. What Trump is doing is trying to bring jobs and money back to America. Thus, you know, the pullback we're going to see is probably more 1987 style before an actual recession. And I believe that's what's happened, which to me sort of helps kind of confirm this bias of a continuing secular bull market. So, you know, if that all falls apart, that's fine. But I see these kind of things confirming each other. The last time we were on, you were also...
So even the things that were out of favor are starting to act good. And this could be part of a blow-off phase, Matt, when the junk is starting to come out of here, kind of like tertiary level stocks. Money's gravitating to things that did not work for years. And now they're starting to work and starting to not be as exuberant about, say, FANG.
Yeah, and I think, you know, even the talking heads on CNBC and things like that, and other chart people that I follow have been talking about I'm doing air quotes right now, a rotation to value stocks, you know, meaning that they're kind of, you know, feeling that, you know, that there's room to move for things that are undervalued or lower cap things or emerging markets and things like that. So, Yeah. And the last time we were talking about gold, silver, and all that stuff, because markets were much higher. And, you know, I was very much of the position that we were going to see some pullback around this resistance here, which we did. I think a lot of people were thinking, you know, small, let me grab this. We're thinking a small pullback and a resumption of trend because of the Fed and yada, yada, yada. Whereas I was more of the position that, where are we here? 2020. So I'm just going to draw a little line where the election would be. Down around here. So my positioning was that we've come up with this large run to resistance. You know, Trump may be who he is, but he's not going to try and drive things straight into the ground right until election day. If he's going to try and make any moves with trade deals, which is then going to see more buoyancy to the market, it's going to be, you know, in the months leading up into the election. So to me, what I was saying to you is it would make more sense to see a pullback, you know, and then things do well into the election. And then if there's more turmoil in the markets, you know, maybe towards the end of his next term, we could see gold continue up. So I'm not really the biggest fan of seeing gold go straight up to 17 when I'm seeing a secular bull market with some value stocks starting to respond, which is my position why I still think that gold seems like, you know, it should pull up before, you know, the next election cycle, which in itself would create a huge cup and handle, I believe.
Interesting view. So more of a, instead of big price decline, more sideways, just digesting. And your line in the sand would be the breakout over, say, 1380. That's where it really started to accelerate. 1360. See
Yeah,
that double top in there?
Yeah,
Yeah,
so
right
we'll want to
there,
be
yeah.
seeing, here, here, and here as support come in over the next year, I guess, really, right?
Okay.
Yeah. So now what I was starting with here was basically, are we in a risk on environment or a risk off environment? And it seems like, you know, risk on with this. And, you know, the general trader, you know, is going to be looking at value in the beginning of this. And now we're seeing a rotation out into, you know, smaller caps. And if gold tends to fail here and consolidate, then we're back to this risk on view. So if we're risk on, there's two things I think we want to look at, which is cannabis stocks and crypto, which have both seen, you know, speculative parabolic bull markets. You know what I mean?
Yeah, I think you brought this up last time that you were becoming constructive on cannabis.
Yeah,
you know, I've been constructive on cannabis since I was about, I don't know, 16.
Right?
Oh, how did you know?
Smell our own.
Buddy.
Anyway,
that's fine.
So something that was very noticeable on the charts, you know, is this just bull market straight up into, where are we? October. So right here, October 17th.
Yeah.
October 17th. October 17th. That was the October 17th right here was the day where cannabis was legalized nationwide in Canada. So we've seen this huge run up to the night of legalization, and everything's just been selling off ever since. The next important date was October 19th of this year. So my position that I believe I've talked about on your show and other shows and tweeted about a gazillion times is the run up into legalization, followed by what would be a speculative sell-off, you know, buy the rumor, sell the news. And then our first key date is this October that just passed, because what the Canadian government has done is taken all of the, we had a lot of illegal shops that were allowed to sell cannabis because the government just didn't bother. But what happened was when
in Canada or the US, because
in Canada, so there was shops,
same things happening here.
Yeah, so there's shops everywhere. So now those shops were selling, you know, flowered product, meaning like dried bud that you can smoke, or edibles or THC oil and all those kind of things. But what they did coming into October of of 2018 was make all of those shops shut down and make everyone reapply in this new legal framework. But they have only allowed a very small number of shops to open, and they have only allowed flowered products to be sold, and the government shops that have opened up in each province have been a very small amount. So if we go over to Twitter here, we're seeing that, you know, many companies are mad at the Canadian government, as I've been talking about, because they have been purposely suppressing the market. So in Ontario is Canada's biggest province and has been running a loss, same as New Brunswick and other provinces. So, you know, here we got the government of Ontario saying, you know, we have 24 shops and we can't understand why we're not making money. You know, it doesn't take a rocket scientist. So they're thinking about changing the plan and the way the applications are done, which would make it go to like 1,000 shops. So if we have this huge demand and no supply, or at least a lack of outlets, of course, everyone is going to be missing revenue. So more shops is extremely important, which comes to our next two dates here, October and December. So October of this year was the first time that any shop in Canada could apply for license to sell edibles. Now in December, after 60 days, the first shops will be able to start selling that product, which makes me think in 2020, in probably Q2, once people have been able to manufacture, process, and sell more edible products, that we should start seeing some consolidation in the market. So, you know, when you see companies like Aurora, which have a lot of assets and are a pretty good company, right back down here at support, you see Canopy Growth, or Weed, which is the bellwether. I mean, that could go down more, but it is also at an old high right here that it bounced off of. Tilray has come down to IPO levels. So those are the kind of things that if we look in, you know, the crypto people and the crypto sphere that I came from, when I see those kind of things on charts, back down to support, back down to old highs, back down to where other fundamental things happened, I think it's really worth taking a look at that sector again. And now that we know that, you know, people sold the news in October 18, and then we have this application for edibles happening right now, hopefully see revenue growth in 2020. Some things that have been absolutely battered, THC Biomed, this is in the same, near the same town that I live in. They're the only supplier of live plants to the British Columbia government. They have a rolling machine that they've recently made and is operational. The company itself has been operational for a number of years. And right in here.
Where's that traded? Says over the counter. Is over the counter in Canada.
Here, let's go.
Are they on the verge of bankruptcy or something?
No,
it's over the counter here in the U.S.
Yeah.
Or yeah.
Yeah, okay. That's what it says. So this oh, sorry, what did I do here?
Do they have a huge dramatic float? Have they been diluting?
Well, here, this all in here, this big sideways that was, oops, let's delete that. You kind of can see this old low here, right here, and this kind of flat line. This support in here, where the owner of the company was very, like, doing a public buy, like was doing a big stock buyback. So, and it was right after this area in here where the president was buying shares of the company, was when the rolling machine came out that they were constructing. So, you know, this company has been making and like growing and selling live plants to medical customers for many years, and they have these other products that they're working on, and they did that huge buyback themselves at 19 cents here. And
where's it trading now?
And it's 12. And then we can see that a fair, you know, down in here looks like a lot more buys than sells. So I think that the company itself has been around for a while. They obviously see some value in themselves to be buying back at these levels. And this is coming into that, what I would call a hopeful turnaround phase in revenue based on the things that we just talked about.
Is there a danger of a reverse split?
Yeah,
Sometimes when stocks get that cheap, that institutions can't participate and stuff like that.
Yeah, I haven't looked into that far into the company. I haven't called them or gone by.
But that could kill an investor.
Yeah,
those reverse
exactly.
splits.
But I mean, it's one of those things. Do your own research. But I think based on the fact that they were selling products before and they got clearly caught up in the speculative phase, and that the company is still active buyers, that it's one of those things to take a look at.
Do you think it could revisit the highs?
I believe that would take legalization in America to do something like that.
Okay.
Because then everything would just, catch fire again. So as I say,
that would be your most speculative buy of the 4 you showed us.
Yeah. So the first 3 were like, big caps kind of thing that have a lot of money that are throwing their money around and buying other people. Yeah. Okay. So another one to take a look at. I've actually know somebody that works with this company. So I know that their ability to grow product and not kill the plant is good. Whereas we were seeing, let's go back over to here. It was, I believe, Canopy Growth in this area up in here. Even though the price was still going up, they were having huge crop failures in their greenhouses. Whereas Suniva, I think, has a lot of potential. Now, recently, this gap down right here was their president resigning for personal reasons. It hasn't been disclosed yet, but it could be something to do with family. And they've also spun off a bunch of their Canadian properties. Now, I think what's going on with Suniva is that they are spinning off their Canadian side of things more and focusing on the American side, because now that there's product legal in Canada, there's more supply. Whereas in the States, I think, from Trump legalized hemp a number of months ago. So I think that after he fired Jeff Sessions. So I think there's the possibility that legalizing cannabis kind of could be on the horizon. And if something like that actually happened, companies like Suniva that are focusing on their American production facilities, I think would produce a better fundamental than a company that is maybe only in Canada. And something that's interesting with this chart is
so you like this one better than THCBF?
Well, they're 2 different things. They're offering 2 different products. Like THCBF
has a roller.
Yeah, and they're a seller of live plants, and they're the only licensed seller to the government of British Columbia. Okay. So that's, they have an official outlet kind of thing. Whereas these guys are dumping money into their American facilities, I think, for future growth.
Okay.
So this kind of pattern that we see has erupted 4 different times, and even to an extent here, and it came up to fill the gap here. Kind of we'll take this breakdown level. So breakdown level in here washes it out, kind of breakdown level in here, that gets washed out. Big, huge gap washes it out. So I think with this gap, at some point, we're going to see that get washed out too. So I think what's that, 40 cents? So, there's an opportunity there for people to, if the chart keeps playing out, that's going to, be almost a double your money kind of thing. So I think that's, taking a look at.
Interesting ideas.
Yeah. I think we talked about the Rand before. This is purely based on, what's happening politically in South Africa. Right before South Africa won the Rugby World Cup there a couple of weeks ago, South Africa was downgraded by Moody's. So that's not good either for the Rand. I think one could make an argument that if this finds a way to consolidate, that we could see kind of like a local, I think people would be screaming cup and handle there.
Okay.
And, you could make an argument for kind of like an inverse head and shoulders thing happening there too.
Yeah.
So I think it really depends on, like, this is definitely a political play, because what's shaping up there is almost like a Zimbabwe 2.0, in that the desire to take farmland from Caucasian farmers didn't work out in Zimbabwe, and that led to a lot of starvation and bad times for the country. And, that same sort of outlook is seeming to be manifesting in South Africa. And South Africa also had water problems, in Johannesburg. in the last 2 seasons. So, you know, pressure on water, which is going to put a pressure on agriculture, and then agriculture itself is seeing a problem because the government is getting involved. So I believe the rand is under
Pressure.
a lot of pressure. Yeah. Now, the interesting thing about this is that I started following the USD ZAR, the rand, because of the political side of things. And then as this chart unfolded, I think the price was right in around here. Sorry, no, on this side here. I was looking at the chart and I thought to myself, you know, I swear to God, I've seen this before. It seems like we just lived this, but in another market. And then, yes, we have. It was Bitcoin. So, you know, on the grand scale, I'm just going to make some marks here. You know, oh, there we go. I actually already did a.
Okay.
Here, you know, bull market. Here's a much tighter defined triangle. This is messier, but you still have this cascade down.
Yeah.
Same as this cascade down,
Yeah.
followed by this same type of recovery. Followed by the same type of recovery, which is 1, 2, 3 steps, shoop, and a blow off. 1, 2, 3 steps, whoop, and a blow off, which was consolidated here.
Yeah.
Consolidated here, and under this line of consolidation, this dip and run back up. So this consolidation, dip under it and back up, followed by a steep curve down, followed by a steep curve down. I definitely got a lot of flack for this back, when was it? Right in here, August. So I was on, I believe, your show in August and somebody else's show in August. And a lot of the comments, and I know there's some swearing on this show, were kind of like, you know, you're a dumb idiot, fuck you, all that kind of stuff. You can't compare a currency to Bitcoin. You can't compare this to that. You can't blah, blah, blah. But the thing that we talked about before on the last show,
they weren't aware of Ghost Day that you made up.
Yeah, exactly. Is that psychology is just psychology. So and then we talked about,
doesn't matter what the title is on the chart.
Exactly. And then the thing that we left off the last program with was talking about so psychology has never changed, and the markets back in the day, you know, 100 years ago, kind of looked the same. And then over time, computers got involved, and now just straight up algorithms are involved. So, you know, the humans are programming the algorithms, and the algorithms are looking at the charts and the old charts. So it's almost, even though it's the algorithms in play, the algorithms are just kind of confirming their input, and their input is our old models, and our old models are human psychology. So even though they're different markets, I think the algos are still, you know,
reflective of human behavior. Yeah,
exactly. So I think that if, you know, we've been following this for, you know, half a year now, and if this continues to hold true, then Bitcoin should be
close to a low here.
Yeah, exactly. And if you look, you know, where we are here, and we look over to the left side of the screen, you see a whole lot of sideways in here, you know, all this, and these kind of levels of consolidation here. And then, you know, on the way up, it consolidated under this level to try and make everyone think it was going down. So if this can bounce off of this, you know, sweet, thick volume level here, then there's a very strong possibility that this huge, you know, cycle that's had so much congruency continues. And I think that people should stay aware of that.
Nice look.
Yeah. Now,
nice
I'm going to take a couple quick, you mentioned Ghost Month. So that's a beautiful segue into the next chart. So down here, we had Festival of Lanterns, or Chinese New Year, which was
that's where I bought it.
Yeah.
High or low down there.
Yeah, which was also kind of like a proper breakout, technically speaking, and also, you know, weird voodoo woo-woo, astrology speaking, also a break that confirmed a higher low. What did we have here? Here we have spring equinox.
That's where I got out and then watched it go parabolic without me.
Yeah, and then so here...
You ever do that? You make the tough money on the turn, you get out, and then you look at all the windfall?
Yeah, I tend to be an average in, average out kind of guy, so I don't get too stuck.
Yeah.
So we talked about GAN
It's
before.
fun.
Yeah.
It's a lot of fun to watch the market explode to your targets without you, don't you think?
Yeah, it can kind of get annoying. So we had
trading's like golf, man.
Yeah, playing against yourself. So something that I talk about, you know, is like astrology and things like that in markets. And if people don't want to believe it, that's totally fine. But the thing I throw out is this, very simply. It's okay to be a skeptic, but if multiple billion Asians believe in it, then even if it's fake, even if astrology is fake, they believe it so much that it's going to influence the market. So you should at least be, you know, you as in the trader listening, should at least be aware to the main key pivots. So over here, Chinese New Year, bang. Here, spring equinox, and we know from GAN, equinox is important. Yeah. Here we have solstice where the market turned down.
Yeah.
Here we have bang on the next, this is September, so equinox again. And the fact that it broke this, you know, what people thought could be consolidation and up, it broke down decisively, like right on equinox. And again, here, if we were to take, like, let's say we're looking at Mercury retrograde. We had sideways, a bounce, retrograde starts here, and it ends right here.
So is it the winter solstice could be the next point?
So the next two main points are, again, you're just lining up my charts here perfectly. The next main point is December 6th, 7th. And this tends to be important for altcoins. Now you can see here, it was a bottom here, this wick down. It did get washed out a tiny bit right at solstice here. And then again here, the 7th, bang, straight up. The 7th, there's this huge wick down and then consolidation into solstice and up. And here the same kind of thing is happening, you know, a break above, consolidation, line, a break above, consolidation, you know, slope, consolidation. So we're seeing consolidation after breakouts coming into December 7th. And I think this is a really important time for altcoin traders to be watching, you know, watching their setups.
Great presentation, man.
You betcha. Again. And for right now, you know, price is kind of sitting right at the fib. Is it going to, you know, is it just washing it out? Because it seems like, you know, we're in a pretty defined channel right now. So this could just be, you know,
it could grind like lower,
retrograde washout kind of happening, and then we could follow some sideways and get back up into that that Rand pattern, which would I think kind of like do something like that. I believe if we were to go back to this. No, it was that one. Yeah. So we're looking for this move in here.
Right. Very intuitive trader, and your recognition of patterns between different instruments is really, you know, an edge that you have, and that you look for things like that. So, you know, another great interview, DJ.
Awesome. Yes, thank you. And yeah, thanks for having me. Hopefully everyone got a little bit of info out of there they can use, you know. So our just to recap for everyone, we are looking at, you know, are we still stuck in a general risk on scenario? Did we just have a 1987 style event, or is it still looming? I think either way, it's not screaming horrific recession, you know. Gold has pulled back at a key level. And if Trump wants to not be an idiot and try and win an election, he's going to be wanting to do a trade deal, you know, somewhere in here, which is probably not going to want to make gold past that high. And if that's happening, then that means we are in risk on. And if we are in risk on, things that have gone speculative bubbles like cannabis stocks are interesting. And we're looking into the first half of 2020 to see increased revenues due to increased stores and increased products. Then we took a quick look at a couple of stocks that have been totally battered but do have properties and are operational. We took a look at a currency that is in trouble due to the way its government is working, and we took a nice look at Bitcoin here and a fractal that's been following. And if so, we're really hoping to see a bottom soon. And finally, for the seriously crypto-focused people, we're looking to see if altcoins can have a bounce. It would be seen as a spike low or a consolidation low, December 6th, 7th. And then after December 6th, 7th into December 21st to 26th, it could retrace or it could keep going higher. So there is movement in those areas where you gotta watch the chart. And then if that all plays out, then winter solstice to spring equinox would be the bullish section. So again, here, March, and where are we? March and March again. So
okay, interesting.
Thanks for having me.
Let me ask you this to wrap it, Matt.
Yeah.
You have 20 grand. You're a high risk investor. How would you break that up between cannabis and crypto?
Oh yeah,
Half and half?
Yeah, I would probably do a little more on the crypto side because I think cannabis is going to be a lot slower moving. Stocks tend to, that's one of the things about crypto is it is so volatile, and the market cycles and the wave cycles play out much faster. So I think that the cannabis sector needs to see a little bit of consolidation. It needs to see that the increased stores and the increased products in Canada can affect revenue. And if it can't, then a lot of pressure is going to be put on the international markets and America coming online. So I wouldn't want to go, a lot of the cannabis stocks are kind of like speculative penny stocks in that sense. So I would take it slow and average in.
Average in.
I would also average in with that 20K.
Okay. All right. Don't use all your bullets at once. Never all in, never all out, but always with a very interesting view is Matt at DJ Thistles, where you could follow him. He also has a service where he talks about crypto. You want to show it?
Yeah, where people can just, get at me at the Twitter page here. And we also have the blog coinstreetnews.com. Need to do a little more there, but either way, Twitter is definitely the best way to get a hold of me if anyone ever has any questions. And yeah.
All right. Knowing your background, what do you think of this, Matt? I'll wrap it with this.
Yeah.
On choosing the right instrument to trade, and I'm sure you get those questions all the time. Should I trade crypto? Should I trade FX or futures? All right. I say this, that just like music, it's not the instrument, but the musician playing it.
Yeah, I definitely agree because there's a couple old sayings. There's more than one way to skin a cat. There's more than one path to enlightenment. My experience from music and trading and being a parent is that there's more than one right way to do something, but the wrong ways are always wrong. So I think it's important to learn from people that have more experience than oneself to learn what's wrong. But don't ever hold on to the opinions of, self-proclaimed gurus as the only one right way to do things, because some people will look at an indicator or an oscillator and be like, that's crap. And another person will look at it and see Valhalla and they can see what's going to happen in the market. I can look at patterns and fractals and pull out random things and it follows that for 2 years and it's easy for me to trade. Whereas other people might look at those things and see no correlation whatsoever. So, to each their own, and we all have different ways to see the market. So
yeah, and it's never the instrument. It's never FX is bad, or because we talked about it. You could change the title of whatever your chart you're looking at, and you would trade it the same way.
Exactly. Yeah, I think the only real difference is the leverage trader, because if you're going down with higher leverage on smaller time frames. And I think you're going to see a lot of people get washed out with those, you know, wicks that go in both directions in 1 hour, right? You know, crypto didn't really do that a few years ago, let's say 3 or 4 years ago. A breakout was a breakout and you just rode it, right? Whereas now, you know, crypto is seeing those same kind of false breakouts all the time. So people, you know, have to adjust their risk based on their time frame more.
Okay. Well, thank you, Matt. I don't know when you guys celebrate Thanksgiving, but happy Thanksgiving. Okay, so that was Matt, everyone, and we'll see everyone tomorrow. I don't know what happened, but he's gone. So everyone have a great day, and I think we have a shortened session tomorrow. So daily golfing, Okay. Remember, don't just count your pips, count your blessings. See you guys tomorrow. You're welcome, guys.